Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets. Thank you, everyone, for dialing in and tuning into the Minds on the Markets video series on YouTube. We also write this, so make sure you go to the Wisdom Tree website to find the written versions of these various concepts. And today, Flanny, Kevbo, Kevin Flanagan, we're talking about this thing that the old joke in markets, whether or not deficits matter. And it feels like, at least in the last, what do you think, 4 to 6 weeks, that deficits are subject matter relevant, that they're starting to feel like they matter. We've got some new data. Why don't you give us the rundown?
Yeah, you're right. How many times do we go through this? Do deficits matter? And sometimes they do, sometimes they don't, right?
Yeah.
But I'm telling you, when you have conversations usually with advisors, that comes up, more often than not about deficits. But let's just bring you up to date. So around mid-August, we finally got the final numbers for fiscal year 2024. Remember, fiscal years are not calendar years for the U.S. government. They run from September through, or I should say October through September in any given calendar year. So the numbers we got now represent $1.8 trillion, arguably a non-COVID related post-war modern era record, up from $1.7 trillion deficit last year. So it continues, regardless of what you're going to see on election day and the results, which I know we'll get to in a second. We have a baseline of roughly $2 trillion deficit right now. And the markets, sometimes they pay attention, sometimes they don't. I think since we're close to the election or post the election, maybe by the time you view this video, that's why it's taking on a little bit more of attention in the headlines.
And I guess there's this theme here where if you go to D.C., can you trip over a deficit hawk anymore? Nobody's a hawk. The GOP, the Democratic Party, both want to splash fiscal stimulus. And that's basically one of these situations where, is there any turning back the clock on this red ink out there?
No, probably not at any time in the foreseeable future. I mean, really, we don't go down the political rabbit hole here on the Minds on the Markets video. But certainly, I think you can make the case. Doesn't matter what side of the aisle, you're really not seeing any signs of fiscal discipline. So hope or expectations of any reduction in red ink for the foreseeable future are probably not realistic at this point in time. So let's look at it, right? Because people are talking about, what if we have a red sweep? What if we have a blue sweep? Either sweep you get, both sides are going to more than likely increase the deficit and treasury supply that has to come with it. Remember, we have to finance these deficits. They just don't happen without any kind of consequence to it. And what would be the other scenario? Say we have gridlock, a deadlocked government. We don't have a House or a Senate moving in with the executive branch. Well, then it's back to my original comments, roughly $2 trillion in baseline deficit. So this is going to be with us for a while. And the question is, what do the markets look like eventually? I mean, do we get to a tipping point? That's the question advisors often ask. What's the tipping point? And for me, the tipping point does come from the bond market, not in a failed auction. I wouldn't expect that. But what I would expect to be a tipping point would be if yields begin to shoot up on their own. Now, with that being said, Jeff, what's important in the Treasury market, the primary driver is macro and the Fed. Budget deficits, swelling supply, they're secondary or tertiary. You can add to or delete from a trend. But if we're at a point now, 2% growth, inflation kind of stuck here around 2.5%, 3%, and we get a big increase in deficits and treasury supply, then, you start looking at that and does a 5% 10-year treasury all of a sudden loom on the horizon?
Well, don't say 5, because that was what got the stock market upset back in the springtime. But that is a number that is on many lips at this point. Now, look, this is the end of the call, so make sure that you are liking and subscribing. This is the Minds in the Markets Wisdom Tree call. Kevin Flanagan, I'm Jeff Weniger. That'll do it.